So in this video, I'm going to show you how I was able to flip £100 to £8,100, or in dollars terms, $100 to $10,000 in just 29 days. I did it with 7 wins and only taking 1 loss. And this was the flip that pretty much changed how I view the Forex markets. It gave me a different perspective and actually showed me what could actually be achieved with patience and consistency. In this video, I'm going to go over the trade management or the money management I used to do this flip. I'm going to talk about the psychology it took to do this flip, and also I'm going to go over some of the trades that I took to achieve this 8,000% in growth in just 29 days. I promise to give you the truth and nothing but the truth. Now let's get into it. So I risked 30% per trade, and my risk to reward was 1 to 3. If I hit TP, I'm risking 30% of the new balance after it hits TP. If I hit stop loss, I'm still risking 30% of the new balance after it hits stop loss. Now it's important you understand that when you're growing a small account to a large account, you have to risk high. It's a high risk game if you want to do it in a fast manner. So if anyone ever tells you they're going to risk 1% or 0.5% and they're going to grow their account by 1,000, 2,000 or 8,000% like I've done in a short amount of time, it's just not possible. It's just going to take too long to do so, risking so small. And another thing is, if you're going to grow an account quickly and make such exponential gains, never put money into your account that you can't afford to lose. I deposited £100 for this specific challenge and I could afford to lose it. The psychology is different when you're trying to make these exponential gains. So this is the very simple spreadsheet that I used to compound the account, and I use this to kind of plan how I'm going to grow accounts. And obviously it's not accurate in the sense of you are going to have losses as you're growing the account, but allows you to visualize what can be done if you are able to hit a couple win streaks here and there. Every now and then you'll hit 5 wins in a row when you're consistent enough, and you can see the exponential growth if you're doubling your account per trade, which is not necessary, but this is what I did for this flip. Right, so let's go through the actual trades on the account so you can see exactly what I'm talking about. Again, this is a live account. I use a broker called IC Markets. I've been using them since 2017. This is not a recommendation. You can use any broker you want, but they are fantastic. I haven't had any issues with them if you're looking for a broker. So anyway, the first thing I did was deposit £29, which brought the balance up to £100. There was already like 70 odd pounds in there. First trade was just me messing around, a penny lot. Now this was the first full risk trade here. I risked 30% of £100, which is £30, and I doubled the account, made £100, £103, right? So now the balance is at 200. The next trade was the first and only loss I took up until the 8,000 point. So I took this trade here, took a loss of 30%, 57 plus and commission, and that brought the balance down to around £130 or so. And as you can see, as we keep going, I'm risking 30% of the new balance, which is £130 after that second trade, which was a loss, and I doubled it here, bringing it up to that would be 280 or 290 odd, and I just kept doubling it. You can see that's double of the previous balance. Then I took some break evens here, messing around with some penny lots, doubled the account again. Then I withdrew some money because I wanted to bring it back to a whole number. I believe that I brought it back to £1,000. Doubled it again here, me messing around with some penny lots, break evens, part of the game. Small withdrawal again just to bring the balance back to a whole number. I've just got an obsession with whole numbers. Kept going, breaking even, and then here doubled the account again. So the balance would have been at 2k, doubled it to 4k, here doubled it to 8k. And as you can see, grand profit of 8,171. And I've done this numerous times with different starting balances, but this always gives me the greatest joy because this is the first time I did it with such a clean win streak from just £100. So that about covers risk management. Let's move on to the next part of the video. Good old MT4. So what I'm going to do here is I'm going to break down 3 trades from this account. As you can see, it's the same account number, IC Markets. I'm going to break down 3 of the trades from this account and the strategy that I used. It's important to note that I use the exact same strategy for every single trade on this account. But because of time, I'm just going to cover 3 of them really quickly. So let's look at GBP NZD first. Let's drag it onto the chart. Alright, so the first rule of the strategy is I trade back into the H4 candle when it closes. So I trade in the opposite direction. So let's go to the H4. So as you can see over here, let's zoom in. This H4 candle closed bearish. So you wait for it to close, and then you look to the left and see if the candle has closed into any structure on the H4 time frame. As you can see, it's closed into this structure here. Alright, so this structure here is trapping this bearish candle. Okay, so that's the first rule. The second rule is within this H4 candle, I like to see what I refer to as empty space or zero traffic. So you can see within this H4 candle, there's just bearish candles. There is no structure in the way. So it's what I call empty space. And there is no structure in the way until we get up to around here. Let's make that, tighten that up. So until we get up here, there's no structure. So you can imagine the H4 candle closed over right around there. So none of these candles would have happened at the time. So I'm looking to buy back into this H4 candle. So this is the H1 time frame, as you can see. I'm looking to buy back into this H4 candle and fill out this empty space. That is literally the core essence of this setup. Okay, so this was the first trade. In terms of confirmation, I like to see a market structure break on the lower time frame. And in this case, we had one on the M15. Let's delete this zone for a second. So we had this market structure break here. So price went down, created a structure low, created a structure high, and then took out the structure. And one of the cleanest ways to look at this is on the line chart. So if we go to the line chart, price went down, created this low, then created this high. We put a line over here. Price took out that high. This becomes a very clean place of demand to buy from, and that's what I literally waited for. I waited for price to retrace into that zone, and I got in a bit late, got in up here. The zone would look like this. Let's make the zone would look like that, and my entry was right over here, and my stop loss was just below. So as you can see, it achieved a risk to reward of just over 1 to 3 to make 100%. So this is when I doubled the account from being £1,000 prior to this trade, which put the account at 2k. Okay, so let's analyze another trade from this account. Let's look at this GBP CHF sell here. Let's drag it onto the chart. Alright, we're going to start off our analysis the same way I did before, from the H4 time frame. So first things first, the H4 candle closed bullish here. So I was looking at this candle after it closed. Next thing, it's closed into structure. Alright, so this structure here has trapped this candle inside of it. Okay, let's zoom in a bit. This bullish H4 candle has closed within this structure. Okay, I also include the wicks. So the highest point of the structure would be the wick of this bull and bear candle. So if we go to the line chart, that's the structure high, and the highest point of that structure high is the wick. This bullish candle closed within the structure's wick. Okay, so now I'm looking to take sells back into this H4 candle. But what do we need? As I mentioned before, go to the H1. We need a nice empty space to be filled. Next point of structure would be over here, at which point I would place my stop loss at break even, depending on how price is moving. So now we've got this empty space to fill. Let's delete this zone. We've got this empty space to fill. Right, price is trapped within the H4 structure, and it's also trapped within H1 structures as well. Over here, you can see these structure highs here. Go to the line chart. It's trapped within these wicks of these structure highs. So next thing, we look for market structure breaking on the lower time frame, M15, M30. In this case, let's zoom out a bit. In this case, this was the market structure breakage here. Okay, so price goes up, then down, forming a structure high, then it goes up again, forming this structure low, and then this bearish candle closes below this structure low over here. So if I put another line over here, we go to the line chart, we have a structure low. Price closed beneath it, which for me signifies this area or this zone, this supply zone, to be a great place to wait for price to retrace into to sell. Obviously this retraced really quickly. I got in, put my stop loss above the zone. Let's measure it out. Right around here, I believe it was. Right around there. Stop loss was a bit higher. And targeted just over 1 to 3 to make 100% on this trade again. And so we have me making 100% here, which took the balance to the 8.1k that we see for this challenge. So let's take a look at one more setup in this challenge. We'll take a look at one of the small ones at the beginning stages of this account flip. Let's look at this USD JPY buy. Let's drag it onto the chart and let's break it down once again, and you're going to see it's very similar in terms of the setup. So again, this H4 candle closed bearish, so I was like, let's see if it's trapped inside some structure on the H4. So I put a line at the close. Obviously immediately we can't see anything in immediate price action, so what we need to do is go further back. So let's zoom out, and so I scrolled all the way to the left, and lo and behold, we're trapped inside this structure here, which is taking out many previous structure highs. So it is kind of a strong level to buy from, or good enough level to buy from. So that was the first thing. And again, next thing we do is we're going to come down to the H1 time frame and see if we have some empty space. And yes, we do. We have some empty space right here, up until at least this zone over here. So I'm trying to fill this empty space here. Okay, I'm trying to fill that. So I'm looking for market structure breakage, either already inside here somewhere or after the candle closes. So let's come to the M30. No, nothing on there. Come to the M15. And there's some market structure breaking over here. So we have a structure high formed over here. So let's grab this line and put it over here. Structure highs formed there. Then this bullish candle closes above it. So that's a sign for me once again, like the two other trades and every trade in this flip, that we're about to go up and fill this empty space. This becomes my zone. Immediately after this bullish candle closed, I wait for a retracement and I'm in. Risk to reward. Again, I'm targeting like a 1 to 3, just over a 1 to 3. So it would look something like this. And that was that trade. Held it during Asia, hit TP, and that was that. So that concludes the breakdown of the trades. Let's move on to the last part. So what is the psychology that's required to flip a small account into a large account? It's actually rather simple. The best position to be in to flip an account is to have money in your bank account already, number one, so be at a decent financial standing. And number two, the money that you deposit, be willing to lose every last penny of it. I know that sounds crazy, but you can't be attached to the money that you deposit if you're going to flip it quickly in any way, shape or form. That is the only way to trade objectively. It's the only way to follow all your rules and have no emotions. As you saw during the flip, as I was explaining the trades that I took a loss and I just continued following my rules because they were objective and easy to follow. So the reality is, to be in a good psychological position to flip an account, you need to deposit money that you're willing to lose, and it really is that simple. And obviously the psychological aspect of trading on a larger spectrum is way more detailed, and I'm going to go into that detail in another video, another full-length video. I'm going to explain all the aspects of how to trade from a good psychological standpoint and be consistent.